The global economy, still grappling with the aftermath of a pandemic and geopolitical tensions, faces a new threat: the return of protectionist policies. Former President Donald Trump's recent decision to impose tariffs on a range of goods from Asian countries has sent shockwaves through global markets, triggering a sharp decline in Asian currencies and raising fears of a trade war. This unexpected move has injected a fresh dose of uncertainty into the global economic outlook, leaving investors and policymakers scrambling to assess the potential fallout. The suddenness and scale of the tariffs have taken many by surprise. Coming at a time when global supply chains are already strained and inflation remains a concern, these tariffs threaten to further disrupt trade flows and exacerbate price pressures. The move has been met with swift condemnation from affected countries, with promises of retaliation and legal challenges. The specter of a tit-for-tat trade war, reminiscent of the Trump administration's earlier trade disputes, looms large, threatening to derail the fragile global economic recovery. The impact of the tariffs has been felt most acutely in Asia, the epicenter of global manufacturing and trade. The Chinese yuan, often seen as a bellwether for the region's economic health, has taken a significant hit, depreciating sharply against the surging US dollar. Other major Asian currencies have followed suit, with the Indian rupee, South Korean won, and Japanese yen all weakening in response to the news. This depreciation reflects growing concerns about the potential damage to Asian economies, heavily reliant on exports to the United States. The Chinese government has denounced the tariffs as protectionist and unilateral, vowing to take all necessary measures to defend its interests. Beijing has indicated its intention to challenge the tariffs at the World Trade Organization, while simultaneously preparing retaliatory measures of its own. The potential for an escalating trade war between the world's two largest economies has sent shivers down the spines of businesses and investors worldwide. The ripple effects of these tariffs extend far beyond Asia. The European Union, already grappling with its own economic challenges, is closely watching the developments with growing unease. The possibility of a global trade war, with its attendant disruptions to supply chains and investment flows, poses a significant threat to the already fragile global economic recovery. The International Monetary Fund has warned that the tariffs could shave off a significant chunk of global economic growth, highlighting the interconnectedness of the global economy. The tariffs have also reignited debates about the future of globalization and the rules-based trading system. The Trump administration's decision to act unilaterally, bypassing established international mechanisms for resolving trade disputes, has raised concerns about a return to protectionism and a retreat from multilateralism. This shift away from cooperation towards confrontation in the realm of international trade has the potential to reshape the global economic order in profound and unpredictable ways. In this climate of heightened uncertainty, investors and businesses are left to navigate a treacherous landscape. The potential for further escalation of trade tensions, combined with the ongoing challenges of inflation and supply chain disruptions, makes for a complex and volatile operating environment. Diversification, both geographically and across asset classes, remains crucial for mitigating risk in this turbulent environment. Staying informed about economic developments and policy changes is more critical than ever. Governments and international organizations must work together to de-escalate trade tensions and find a path towards a more stable and predictable trading system. The alternative, a world of escalating trade barriers and economic nationalism, would be detrimental to all, stifling growth and undermining global prosperity.